We're joined by Elise Roberts, certified financial fiduciary and featured expert on the new book, A Journey to Financial Security. We're going to talk about how money grows in an annuity and why that growth is so important to retirement income and retirement planning. Elise, talk to me about the different ways money can grow inside of an annuity.
Well, the growth of the annuities really depended on the type of annuity, number one. So in many cases today, you can either take, like, let's talk about the fixed indexed annuity,
Okay,
just for a moment. Because now you have two ways to grow your money. You have a fixed account, which you get to choose each year. Do I want the fixed rate? I'll guarantee that rate. I know my number. Or do we want to follow the market? And again, you're not in the market. It's a fixed indexed annuity. We're following the different indexes, the choices that company gives, and they're all different. But in the general picture, your money is following an index. Let's say you choose the S&P and some of another index. You can mix it up.
Yep, okay.
You don't have to put it all in one. You could even do part fixed, part index.
Okay.
It's really nice.
All in the same annuity.
All the same account. And then what happens with the part that's following the market, it's not in the market. So what happens is when the market goes up, your account goes up, market drops, your account doesn't drop. You never lose any money because you're not actually in the market.
So in a fixed indexed annuity, no matter what, even if I choose 100% going to the index, nothing in the fixed account, when the market, that index goes down, I can't lose anything.
You may not make money that year,
Okay,
but you're correct. You will not lose any money.
But what if I gain money the year before?
You still got to keep that. So
Okay.
you haven't gone backwards. Once you have a gain, that's yours to keep for the life of the plan. And if you take money out, is the only way this thing is going to go backwards. It's the only way your account, actually, the value would drop, unless you choose.
But what about the fees?
If there is a fee.
Some of them don't have a fee. Okay.
I know. I love that.
So really, there's no way for my account to go backwards?
Unless you chose one that had a cost.
Okay. But I can choose one with no fee.
And I'll show you those all day long. I love that. Most of them
And it's
don't.
indexed, but without the downside to it.
And there's so many, let me just tell you, today, I'm going to jump into some new features. They've just come out, and if someone is doing annuities on a sideline, as a sideline business, they're just not going to keep up with what the changes are.
Yeah, because there's a lot of different complications here, right?
Oh, there's a lot. And what's coming, it just happened, actually. What is out there now is, I'm shocked. It's like, okay, I have enough annuities. I'm ready to I need some more money. I'm going to find more. I'm going to open another one, because what they've done is allow you not only to get out your income when you're ready, but to actually go back and get extra money out along your life and never lower that check. Unbelievable. And there's more to it. It's harder to explain, but this new feature, I've figured out a way to help my clients set up the income stream, take all the money they can out as income, and then each year decide if there's a gain, there's a way to get more money, and get that extra money out. The check's not going down. Do that until you deplete your account. You got all your money out. Now we're going to leverage the money that we're going to live on the insurance company. And now we're going to start taking those increases in the account. And the income is going to increase.
Even though there's nothing left in it.
Right. It is the greatest. If you're listening to this show and you want to know more about it, you've got to call us.
Well, it just kind of sounds like product evolution in the annuity world has really changed the entire industry. And actually, that brings me to another question about how money grows in an annuity. You know, a lot of people have older annuities that might be a few years old, but they're still within term. Or forget annuities, even CDs or treasuries. And you got a 10-year CD, a 10-year treasury, a 10-year annuity. I'm only 3 years into it. You were talking to me about this backstage, about how it might be worth it to get out of those, give up some interest.
But you have to give us a call to find out.
Okay.
We have to actually do the work, find out what it is that's going to cost you to get out of it. Is there enough money in the next one, in the front, maybe a bonus or one of the features that make this almost impossible not to make that change, because it would not benefit you to stay in the old environment. Annuities follow the environment you come in. If you've got an older annuity and you're stuck and you're not making money, we've got to try to get you out of it.
And see, that was the thing that you said to me that was so interesting, is even if you only have a year or two left, what happens in a year or two when you come to renew those CDs, those annuities, and interest rates are lower?
Now you
Might be
don't-
worth taking the hit now and locking in something for a long time that's paying a higher
And you're going to
rate.
follow that industry, or this not industry, that environment of the index.
Of whatever the interest is at that time.
Correct. So right now, interest rates are really still pretty high. They're not as high as they were a few months ago, but they're high. They're only going to go down as the stock market goes up and vice versa. And if you feel like, okay, the market's getting ready to have some real growth, and that's what we're starting to see, now's the time to actually, you can leverage your money to make a lot of money in the market. But if the market goes down, what's your protection?
Right.
Put some of the money in one of these, lock into this great new environment, and have it for your lifetime.
By the way,
lifetime.
I think that's such an interesting part because I think about myself. And with my mortgage, I was in such a rush to pay it off.
Ooh, I know. And look,
But now I kind of wish I had that old
was the
mortgage.
rate?
I mean, 2.75.
Right. Don't you wish you had it? But you sold it off thinking, I don't want to have the mortgage. Now you're in a new environment and you're stuck there if you have to get a mortgage.
Yeah.
This works very similar. Annuities are the environment you come in. And if you have an older annuity, it's really important to at least have a conversation with us so we can do the due diligence to find out if this is going to benefit you to go ahead and try to get out early. Take the hit. Maybe there's a bonus that gives you back all the money and you really start out still ahead.
So the annuities that I would be getting today would be an annuity that a couple of years from now
You won't
I
be
may
able to
want
get.
to be. Yeah.
You won't
And
be
so
able to
I'd
get.
want to hold on to that thing, right?
And they'll be trying to buy it from you.
Really?
These companies will send you offers. They're like, we're going to help you get out of this annuity. And it's
Yeah.
like, yeah, well, there's a reason they do that.
Yeah, exactly.
You don't want out of that one. And this is what's going to happen. So if you come now and you position some of your money in an annuity, in about 3 to 5 years, the company will almost pay you to get out of it.
This is interesting stuff, and we just think of the old annuities, simple, I give the insurance company my money, I take a lifetime income, but we haven't even started talking about lifetime income right now. We're talking about how you can grow your money. Have you actually seen, one last question, because we're running out of time here.
I can't wait for this question.
Yeah, I
can feel
got
it.
the hot button question. Do you ever see people use annuities that they don't even want income from?
Oh, yes.
Oh, yeah?
Yes. And those are what I call an accumulation annuity or a legacy annuity.
Okay.
So let's say, look, I'm leaving this money to my kids. I just did one this week. Gentleman is moving his qualified money. He's converting it to Roth. The company's offering a bonus of 45%. This money's for legacy. It's going to pass to his daughter. And there's a 5-year wait when you convert, right?
Right.
He's only 65. At 70, now all this money's Roth money that will pass to his daughter. It's what he's doing, tax-free. And we're going to grow it as well. And with all the new features, you can lock in rates in the middle of the year. You can, if he decided that he wanted income, he can still do that.
Ladies and gentlemen, you're hearing it right here on the Annuity Show. It's not your mom and dad's, not your grandma and grandpa's annuity. Annuities are so much more. You want to learn more about how you can actually just grow your money in an annuity or use it for legacy planning? Give Elise and her team a call, 888-526-4184. Go to the website, theannuityshow.com, or simply scan the QR code at the bottom of your screen.